course, at the end of our presentation, please review our disclosures. Let's jump right into this. Now, periodically, we're going to do a chart for the purposes of mentoring, just giving you a visual of why I like something versus why I don't like something. All right. Now, this particular chart encompasses my mound theory, which really was founded in economics. And I had the idea and I sort of incorporated, basically money or dollars or investment has a desire to constantly find a greater source for capital. So that occurs in a stock as well. So as a company becomes successful, it grows. So the number of people who participate in purchasing the stock continually grows and elevates, and it creates these mounds. What is better referred to as sentiment, but you get a trajectory or a slope that occurs. So off of mound one, basically our foundation, which is our base. So we did our basic program, our prior high, our confirmed high, which indicates that it is the end or about to be the end of mound one. Now we could push up a little higher and this whole thing could reset. If we get a confirmed high here, which again, a confirmed high is a higher high in price and a higher high in RSI. So we had higher high in price, higher high, right? So this creates a trajectory or slope or the mount, and fundamentally we can come over here and draw it in RSI as well as in price, and they should be similar. But we can see it's sort of peaking here. So we could roll over just a little bit, back test here. We could come back all the way to where transport is and then go. But there was a couple things that I just liked. All right, let me do what I do when I'm looking at a chart. So now that is an impulse scan. All right, notice how, now realize the Fibonacci extension is based on wave one, right? Typically the peak of wave one is around the 78.6. So structurally it's there, which means mound two should extend to the 160.18 fib, which is why I have it marked that way. And ironically, in an impulse scan, what does it do? There's some confluence. It lines up. I like the way that looks. So that gives me some decent conviction that we have to the upside. On top of that, you take our supply and demand zone down here, basically from our breakout, we've back tested, we've held, right? Volume is also rolling over here like it's going to squeeze. So we could pop right up to 70 bucks pretty quick. Now, the downside here, and this is why I'm excluding this from calls, or at least the mindset is, I'm probably wrong, but either case, right or wrong. And what I mean by wrong is I'm probably wrong not to take calls, like with Planet. Should have taken the blasted call. Sometimes I'm way too conservative to be a trader. Way too conservative. So like everything else, it's a process. All right. So the automated scan AI, which is driving this a little bit, artificial intelligence uses technology to come up with a determination, currently states that we have a wave C, which is likely. So this is an ABC corrective leg down to about 41 bucks. Well, of course, I don't like that for call. So what I do like here, though, is potentially putting on some cash secured put, because I think this changes. I think this morphs. I think this wave steps up. And just in the looks, this does not look to me like a leading diagonal in mound two, because almost always the first drive, so to speak, is a impulse. So I'm going to just leave that price there for a second and just explain why So the thought is that we are going to get an impulse leg here. It goes pretty much from here to here. And look at how euphoric that could be. Reason being, you look at the technical tools that we have visually. I think this holds up and this continues to extend. So they could push us up to maybe 103 before we get it back to us. Could push us all the way up to 5. Now, what I like about that, because this will extend, and I always like something that I can see it that extends. Hold on a second, wrong line. So this would extend up here, and this is, what I do. I extend up here, so it still would potentially back test 78.6. But our 3 target is pretty solid up there at 103, unless we take this out. So where's our stop? Our stop, on cash secured puts, you're not. 52 bucks goes below there. There's no catalyst for a bullish breakout. However, we break above this 68 bucks. Now we want to chase calls. So we want to add calls into the play, because structurally I see this expanding to the upside. In addition, this is a broadening. So it will leg up. However, I must come back and say that most often the mounds honor wave resistance and wave support, or mound support as I'm calling it, because I want the Fibonacci extensions, support and resistance to align with the thesis or the thought. What I like here is I like below this shelf, $35 to $40 cash secured put on AFRM. Really could even sell some 45s, but we're going to be conservative here and just say 40. So we're looking for that particular range. Structurally sounds pretty solid to me. And then again, we break out above. I'm going to print this chart, by the way, for you guys. So it's going to come in. I'm going to say add calls above 68.20. Right. Just now getting all of my templates rebuilt from deleting it all. Spent literally years creating everything. And so structurally, there's two targets that we want to look at. Right. Let me just bring in a P&L tree because we really do not want to risk much below this 40.97 because then that whole structure breaks down. Should hold up. Notice how that ledge is there. We came back tested the low side of that. It gets below there. It really opens up this whole gap. So we could be anywhere in this range. Right. So some downside might come in. So if there's a little weakness, first target is going to be back up at that 73 in this thing. So it looks pretty. So that's roughly my 2 cents on AFRM. That's what I've got. We're going to start doing one chart once in a while, sort of for purposes of mentoring about why I think what I think, why I think it. Great trading, folks. Until next time.